Joining us right now for more is Brent Thill. He is analyst at Jefferies who rates Meta with a buy. He's got a price target of $225. The stock right now is just below $190. Brent, let's talk a little bit about this. First of all, the idea of more layoffs, the company has not confirmed it. Is that something that you think is a likely possibility?
Absolutely. Tech overhired overall. We've seen numerous companies across internet and software continue to cut heads. And this really comes to growth is stalling and employee headcount is up massively. Last year, Meta's headcount was up over 20%, yet the revenue is stalling. We're continuing to see a stall out on revenue growth, and employee headcount cannot continue to go higher. Actually, revenue per employee was down 20% for Meta. So we still think there's more cuts to come. Remember, the cut that happened in November was when the stock was in the 90s. It's almost doubled since they made these cuts. And Zuckerberg did a complete 180 on what he was saying and came back 2 weeks later and made the cut after he said he was going to spend like crazy.
So is this cutting to do what Wall Street wants? Because Wall Street sent this message, the stock has performed very well since they announced the original cuts and they're cutting more? Or is this they see that the numbers that they're getting in terms of ad sales are even worse than anticipated and they need to try and keep ahead of that?
I think it's a combination of both. I think it is partly Wall Street, but it's also the right thing to do for the company's health, which is you can effectively do more with less. And the entire industry, from Salesforce.com across the board, massively overhired. And we've been saying this. We expect more rounds of cuts. We had another company last night in Atlassian make their first round of cuts. There's other companies like DocuSign who have cut almost 20% of their workforce in two separate cuts. So we believe there's another round, and we think it's also going to filter into the rest of tech, and that they will continue to follow Meta's lead as others make these cuts. Again, it goes back to
what's the right number? If they've already cut 13% and they've got more cuts to come, what's the right number? Wall Street wasn't really complaining while these people were being added in the first place. It's just a new paradigm. We don't believe Meta is going to be the place where money's spent. Everybody's looking to throw people and resources at things like AI. What are the right ways? Should they have changed their name to Meta to begin with? And is that where the future growth really is? Is that going to still be protected like it was in the last round of layoffs?
I think ultimately the right number is where effectively you start to see revenue per employee growing and where you see revenue growing. And until we see that, we can't continue to hold the headcount that we have. And so it's going to vary across industry. And again, we've seen anywhere between a 5 and 20% layoff in the majority of the companies we cover, over 50% of the companies we currently cover. And again, there's going to be multiple rounds until they get it right. And I think they're realizing they're probably initiatives that they don't need to go down. Again, the Wall Street doesn't want them to go down the metaverse angle. They want them to stick to their core ad business because that's their core business. And so, again, I think we're going to have to figure out, it's going to take some time. But clearly, if this report is correct and there's thousands of more jobs coming, it's clearly a signal that there's initiatives that they don't need to pull off, or they feel like they can do more with less. And again, I think that's the theme across tech. This is not a Meta-specific issue. This is what we're seeing across our whole industry we're covering.